Hi traders, welcome to this video. This is a thank you video for all. This is now the 100th issue of the free market update newsletter. And yeah, I want to give you a big thank you from my side for being loyal subscribers and giving me feedback to anything I produce. And I want to look with you into my current portfolio, and I want to explain you a little bit why I own some stocks. So you can see we are here in the MarketSmith software from IBD, and I currently own 7 stocks. I sold 2 stocks this week, and I also want to show you them. The first one is apps. This is Digital Turbine, and I sold them because I bought it very late. So I bought that here on the breakout after this very nice consolidation here. And yeah, it was already the third pullback. So you can see that here, first, second, and this was the third pullback. And if you remind yourself about the tweet, I sometimes tweet, the first pullback is Bible, the second one is also still Bible, the third, be cautious, and the fourth, never buy. And I just expected a small rally, and the rally happened here to the 40 US dollar level, and I sold the stock around this level here. So when the first close happened below the EMA 21, and then I placed my stop loss here and got stopped out 2 days ago. So yes, I gave back a lot of profits here from the 40 US dollar level, and in hindsight I must admit maybe this was something like an exhaustion run, but yeah, this is hindsight. You know, you never know that before, and I always look for bigger gains and bigger profits, and that was okay to give back a little bit here. And I think I make around 1 R, so 1 times my risk with that trade, so a very little profit, everything okay. And I moved on to the next one. And today I sold Datadog. It was a very similar reason here. You can see Datadog, I bought it here on the breakout above this 100 US dollar level. So a very nice breakout on huge volume here. And it ran it rallied to the 120 US dollar level here and then pulled back. And if you remind yourself about the tweet, I sometimes tweet and say, okay, the really big growth stocks, so the really big winners, they don't pull back to the levels, or they don't pull back here to this breakout level. And Datadog did that, so it retested the 100 US dollar level. And in that case, I want to go out break even. So I want to exit the trade break even, because if now, for example, Datadog will move higher here and set up again, I can easily buy it back. So, and if Datadog will do the opposite, so for example, maybe go a little bit higher here and then move down and move sideways or start a bigger correction, in that case I'm out. So, and I protected my capital in that case. So that's why I sold Datadog here. And and now I'm still owning 7 stocks. The first one is Beyond Meat. So I made a video about that on YouTube. You can see that why I'm so interested in Beyond Meat. And Beyond Meat is also or started to pull back to this breakout level here. I already have a little bit profit cushion because I also bought it here on the breakout. And I have a very tight stop loss now in Beyond Meat. Below this daily bar here, and we will see what happens. So maybe it will correct more and then I get stopped out and I can buy back anytime. And what you must have in mind is we have now today Friday, and all the stocks which are going to close very weak will produce red big bars in the weekly chart. And the weekly chart is very important for me. So, and if you look now at Beyond Meat, you can see that this is a pullback to this breakout level. So, but the initial rally started lower, it started here. So it can also easily correct more and then maybe going higher here. And in that case, I don't want to have capital because I want to see really stocks which are going through the roof after I bought them. And maybe I bought Beyond Meat at the wrong time, but then I will leave it on my watch list and buy it back. I personally like that very tight consolidation here. And yeah, maybe it's able to rally higher next week. We will see that. Another one I'm also a little bit disappointed is Data Nexus or the Data Nexus. This is an IPO stock in China, and they are specialized on last mile logistics. So that means if you buy, for example, a product in a mega city in China from a local store, they deliver that to you in 30 minutes. And they have a very interesting network of people who deliver goods to you. And they are growing fast. You can see that here on the sales growth. So this is very outstanding sales growth here. And I personally think this is also not a trash stock, China trash stock, because it is a spin-off from JD, and so JD is a very serious company in China and is also respected by Western investors. And we will see what happened here. So I bought a Data Nexus here on this day when this $30 level was broken here. So I still have a little bit of caution here. And this is the same thing here, you know. I don't like that when stocks pull back after they break out. A lot of people think that this is normal. Yes, it is. But in many cases, it's also a sign of weakness. And you must always have in mind, you can easily buy the stock back. You can buy it on a pullback, you can buy it on the next breakout. But I want to avoid to have losses, so I get out, break even. And I also want to, I don't want to have dead capital. So I don't want to have capital in the stock when it's going sideways. And yeah, I personally don't like that when a stock pulls back here on high volume, so 100% above average, and showing a 7% loss. This is normally a situation where I sold or where I sell some stocks into weakness. Maybe I will do that before the close today. We will see that. But yeah, my stop loss is very close to that low here. Another stock I bought this week was Farfetch. And this is very typical. If you have a weak market environment, you will see a lot of those, of these failed breakouts. And sometimes those failed breakouts will reverse on the next day. So especially if the market indices are very weak, you see that behavior. So that they try to break out, but the market is holding them down. And then when the market a little bit eases, the stocks are going through the roof. And Farfetch is something. So I bought a very small position yesterday here, and the position went negative immediately. So which is a very bad sign for me. But I decided to hold it with a very tight stop loss below the day and give them some room so that I can see if this can reverse today. And you can see that, yes, it reversed to 3%. And if I now look at the weekly chart, which is very important for me, you can see that the close is very, very close to the highs here. And this is something which I like to see. This shows me that it's a strong stock. And you can see also that the RS line is here up. So this is also a good sign. We have higher volume this week, which is also a nice sign. And of course, I mean, Farfetch is a big grower here. You can see this sales growth numbers. I have a little bit doubt about the story itself. So they are doing luxury. So they are selling luxury products, especially from a fashion, from the fashion sector worldwide, and they are also very specialized on China. And I listened yesterday to an interview with the CFO from Farfetch, and he said something like, so if a luxury brand want to go to China, they have to use us because we are the biggest platform to sell luxury fashion in China. This is a very nice competitive advantage. But the retail sector itself also has a lot of marketing cost, and you need a lot of logistics and etc. And if you now look at the yearly EPS here, you can see that. So it's not improving, and yes, they are reinvesting all the profits into the growth, but we will see. So I bought a small position because you can see, I mean, the stock is up here from 6 to 30, so that's a huge demand for the stock, and it was one of the strong stocks in this week here, and and it's very close to all-time highs here. And this is why I own a position here, and I own only 10% of my portfolio in Farfetch, so that's not so much a starting position for me. I also own Futu Holdings, so a China stock, in the investment sector. I personally think they are very interesting because they are offering China clients the opportunity to invest and trade foreign stocks, so also from the US. And they are called a little bit the Robin Hood from China. And they have another department, and they are doing IPOs. So, for example, they did the JD IPO on the Hong Kong Stock Exchange. And you can see also this big growth here in the last sectors. This is a China stock where I have, or where I'm a little bit more cautious. So, because it is not a well-known company, and it's also, The management team from Futu is also coming from a big player in China, so it's Tencent. So they have some background, and I think one of them also had a career at Citigroup. So, but I'm a little bit more cautious when I see such big growth in stocks in China, and they all present unaudited quarterly reports. So that's another thing where I'm a little bit cautious. So I would not put 50% of my capital into Futu. I have a small position here, also 10%, and I bought it here. So when it broke up and broke out of this small base here, this is a double bottom base. And you can see here around that level, it's a small consolidation, and then the stock burst out of the consolidation on higher volume. And then the next day after I bought it, it pulled back directly. And that was a situation when I normally sell at least 50% of my position. But in that case, I gave Futu a little bit more room. So it was a little bit like the Farfetch situation. We had a weak market environment, and I put in a very tight stop loss below this day here, and I only had a 10% position. yeah, and the next day it went a little bit higher, and now it consolidates very nicely, very tight here. We will see. So maybe I got stopped out or not. Doesn't matter. Or it rallied higher. We will see. JD, another China stock. So you can see I'm owning 3 China stocks here. So Data, Futu, and JD. I personally like JD. I mean, you can see this very nice relative strength line. So it's going higher and create new highs, although the stock is not on new highs. So a very nice situation. When you look at the weekly chart from JD, you can see it's up a lot. So, and if you now count the bases here, so maybe 1, 2, 3. Yes, it's already a little bit extended. Maybe it goes to $100. I'm not sure. But it's consolidating here very nicely. So, and very tight. You can see that here around this last all-time high, and maybe it's something like a cup and handle pattern. We will see. So, but I personally like that. This is a growth story in China. JD has good estimates for next year here. It is it shows increasing sales growth, increasing EPS growth, and so it's also a little bit more a large cap. I think they have 124 billion market cap, so it's not a small one anymore. And also you can see here on a number of funds which are owning them. So this is a institutional, I would not say favorite, but it's an institutional accepted stock, and it's also having return on equity and EPS growth. So it shows all these canceling characteristics. But I personally think, you have a lot of growth in China, especially in the e-commerce sector. And China is still growing, and it's a very, very fast growing market also in the e-commerce sector. And there are only 3 very big companies, and this is Tencent, this is Alibaba, and this is JD. And JD is one of the strongest growers in the China market, in the China e-commerce market. So very interesting. But as I said, this is not a stock which now double or triple. So I think they can go up to the $100 level. And that's it. So I'm following JD also here with the EMA 21, and maybe I will change that to the EMA 65, but we will see that. Okay, another one which is a little bit better, so showing a little bit better behavior, is Pinterest. And I bought Pinterest here on this breakout. And it was very nice and gapped up this week because of the Snapchat numbers. And I think social media is really something which have a lot of potential in this COVID-19 situation. Especially Pinterest is trying to change its business model a little bit away from the classical advertising, more into the direction of shopping. So they want to present products from other companies on their platform as an advertising. But I think Pinterest is very interesting because they have the right content. If you look at Instagram, you see a lot of selfies, and people are showing photos from their private life or from their holidays or whatever. So this makes it very difficult to place products around the content. And Pinterest is a little bit different because this is a platform you are looking into when you, for example, want to update your living room or something, and you want to buy new furniture and you need inspiration. And I think this is the right content, for example, to sell furniture, to sell things for the garden or whatever. I think this makes it really interesting, and they had a very good growth in this new ad formats. And I think this is interesting. You can see that here on the EPS numbers for next year. So very big, 200, 700. And the only thing is this revenue growth. This was very weak in the last quarter, but revenue growth is only one currency in the social media platforms. I think the daily average users or monthly average users, which are more important, they were up 39%, and this is the more interesting currency in the social media business. And you can see also something, and this is a young IPO stock, and you can see a lot of volume coming here into the stock, and that shows me that institutions are coming into that stock. If you compare that with Facebook, I mean, they have really problems to grow, and these smaller social media platforms, Snapchat and Pinterest, and maybe also Twitter in future, I think they have a lot of more potential when you compare that with a big and more matured company like Facebook. I think, they will present earnings in 5 days, and I will definitely hold through earnings because I'm sitting on a good cushion here. I added to my position multiple times, and we will see if the numbers can convince or not. But I also want to highlight one thing here, and this is, you can see that here after IPO the stock was not able to rally. It corrected a lot, and this is something which you can call a due diligence phase, where institutions check the numbers and put the stock on their watch list and try to get more information about the business model and potential. And then you can see that the stock, with the market correction here in the S&P 500, undercutted the last low here in the weekly chart and then rallied back with the market coming out of the correction. And that all on high volume, and that shows me that really institutions search for investment into the stock. And that's why I was interested in Pinterest, especially around this all-time high level here, because that gives the stock another fuel so that they can explode to the upside when they go on new highs here. Another stock I'm owning, and which is behaving good, is Roku. You can see Roku has a very nice long base here, long time consolidation here from September 2019 to September 2020, so around 1 year, and you can see the same thing here, undercut in the weekly chart and then rally back. And you can see also that the volatility is decreasing here in the weekly chart. And that was something I was really interested in when the stock consolidated constructively and nicely around this all-time high level. And Roku also, you can see that here, big growth, improving a little bit in the EPS for next year, increasing number of funds coming into this stock, and I really say only 30 billion market cap. I think this is relatively cheap for such a company, which has a very nice brand and a very nice growth. And if you compare that with, for example, Netflix or something, I mean, it's not comparable 100%, but you can get an impression when you look at, for example, Netflix, what's possible for a market capitalization. And I think Roku is really on the beginning of its growth cycle. And one thing what interests me, or what caught my attention with Roku, was that they were able to grow its advertising business in the COVID-19 situation. And you must always have in mind, Netflix, they don't have an advertising business. So Roku needs advertising. And if you look at social media platforms, for example, at the same time in the COVID-19 situation, they all have problems they all had problems with advertising because other companies cutted their marketing budgets. And Roku was one of the companies which were able to grow in that situation. So that means companies are shifted the budgets to Roku away from other advertising platforms. And as I read that, I really got interested again in the stock. And you can see here also these big skyscraping volumes, so institutions putting money into the stock. And I bought that stock here. So after it broke out to a new all-time high, and you can see it rallied higher here. And one thing was also interesting. Netflix presented numbers this week, and was down. And Roku was up on that day. So normally in the past, when Netflix presented bad numbers, also Roku suffered a little bit. And that was not the situation here. So that could be a sign that institutions put money into Roku instead of Netflix. And we will see. I personally think Roku is a very interesting company. It consolidates here very tight, very nicely. And I also have a cushion here. So that means I'm willing to hold through earnings here. And we will see. And another thing, I think Roku is also a merger candidate. There were some rumors with Google. I don't think that's the most important story here, because if you look at the Google product portfolio, they presented a new streaming stick with Android TV, and but maybe there are other companies like Microsoft, for example, which are looking for interesting merger candidates also in this digital service sector and streaming sector, and maybe Roku is one of them. But I think this is not the primary story here. The primary story is really that internet streaming is growing extremely fast. Roku has a very nice platform which is running also on low-cost TVs, and they are independent, so they don't have the problems with the competition between, for example, an Apple and an Amazon and a Google and a Facebook and etc. So they are more independent. They are offering all the platforms on their platform, and I think this is a nice growth story. Also, because they are at the beginning of the growth cycle, so I think they are available in the USA. They are available in Canada and UK and the rest of the world. They can conquer and try to provide their products in other countries. So we will see. I'm always looking at those stocks from a potential perspective, and I don't have any profit targets with them. So I follow the price, and when I see signs to sell them because of weakness or because of exhaustion, then I sell the stocks. Okay, that was a short look into my current portfolio. If I look back at the last week, it was a very difficult week. So I sold 2 positions and I bought one new. And the market is not very volatile, but volatile at the moment. And I'm excited what the next week will bring into my portfolio. So that was a thank you video for a look into my portfolio. And I will continue with the next video around my watch list.